This is Mastering Your Wealth with David Gagnon, the podcast.
President Trump, he is a busy man. He recently signed an executive order that allows private equity offerings in your 401k. Wealth manager Rebecca Walser of Fox Business says this might be an instance of buyer beware. Let's hear what she has to say.
The problem is that the 401k administrators don't want the liability of actually advising you what to invest in, whether it's right for your risk profile, right? So they're not going to tell you, yes, you should do this. They're just going to say, here's the new offerings. And then whatever the prospectus is and whatever the disclaimers are, that's what people are going to have to read. And so people aren't going to read them and they're not going to really understand what their risk is. I'm not against private equity, absolutely. But to give private equity to every investor in their 401k when they have no understanding of the risk level that it could be, but they just say, hey, this is what you do, automatically enroll, automatically contribute, and don't worry about it. Just set it and forget it. And that's not something you can do with private equity.
I want to break this down because, listen, you know me, David. I don't even know what private equity is. So let's talk about what that is. And should it have a place within your 401k or any retirement plan for that matter?
Private equity refers to investing in companies that are not publicly traded. You know, you're not going to be able to go on the exchange and find a company and buy it with a stock symbol that's there. And they can offer higher returns, in some cases much higher returns, but you can lose your money. And I've seen both sides of that happening, where people lost all their money and some people did extremely well. And they're very illiquid. So it's not something that you're going to put your money in and be able to liquidate it at your discretion. So you might have to wait quite a long period of time to get your money back. The valuations of what it's worth can be very complicated, and the fees can be extremely high. So it's not the right fit for a lot of people. I had a client many years ago that wanted to take a chunk of their IRA and put it into a niche private fund offering higher returns. And after we modeled everything out and what the outcomes might look like in their numbers and looked at their liquidity concerns, we actually limited their exposure to less than 5% of their portfolio. So we tried to do the analysis first, see what might work and align best with their tolerance for risk. But what we did there, we were able to give them all the flexibility and create a core income plan. And if something happened to that 5% investment and they lost it, it wasn't going to derail the retirement. So, but retirement savers, you know, the key is to have diversification and liquidity. And these two things in private equity just doesn't provide that. So you got to be really careful when you look at these options. And, you know, we help clients evaluate whether alternative investments do fit into their plan. And if so, you know, how do you measure the risk and what are the value-added benefits? And make sure everybody has realistic expectations and a comfort of knowing what to expect, and make sure their plan is resilient to this side where if it doesn't work out, you're still going to be okay. Right. Yeah. And just like with digital currencies, whether it's Bitcoin or any of the other digital currencies, a lot of people were asking about those investment options possibly. And I always say, listen, they're extremely volatile. Just put aside play money that you can afford to lose. And if you want to play with it, that's fine. But don't overexpose yourself where it's going to make or break your retirement or your long-range planning. And, you know, some people are doing it. I don't get into advising people to invest in digital coin. We do things differently with alternative investments to kind of really align the right tools with planning that reduces risk and creates liquidity and creates income and growth. You got to be really careful and know what you're getting into.
Because we're talking about 401ks here and being invested in the market, that kind of deal, I wanted to switch gears because the stock market continues its dance with record highs. As much as we've watched it and said, you know, the other shoe could drop tomorrow, it seems like everything is holding steady. So what's next? Well, here's portfolio manager Katie Stockton on CNBC.
Honestly, a sell-off would be pretty healthy in the big scheme of things because it presses the reset button, because it helps the trend not get too steep. Because what happens when you get a very steep uptrend, and arguably we're getting kind of close to that, is that the way it's sort of resolved is in pretty dramatic fashion. And that would suggest that we could use a pullback to sort of normalize the slope of the uptrend.
All right, so you hear that a lot. You know, a pullback is healthy for the market, but that may be true, but nobody looks at a pullback in their retirement money as a healthy thing. That doesn't even sound healthy. So if we have money in the market, David, how do we go through these ups and downs without hurting our retirement plans?
Well, I'll tell you, when the markets are hitting highs, the emotions override what might be a good strategy that people are trying to follow. And people do get complacent, especially in the recent past where we had a big drop in the market back in '08. But there's been a steadily incline to the market to now where we are today, where we have all-time highs. We've had some bumps along the way, but right now people kind of let their guard down. And what's important to really understand is if you're trying to hit the home runs and stay the course and get these high returns and experience volatility along the way, and you're getting close to retirement, if one of these pullbacks happens while you're pretty close to retirement or in retirement, that could change your opportunities of spending the lifestyle you desire to have in retirement and change everything in a bad way and derail it. So when we talk about our portfolio analysis all the time that we do for people, and what's really great about that exercise is we can show their entire investment plan, do the X-ray analysis on it, and show them what kind of risk they're currently taking and what kind of returns they're getting. And then we compare that to alternative proactive strategies and management and the right product tools that are part of a cohesive strategic plan design. And almost in every scenario, we can show people how we're reducing a lot of risk and increasing yields and better consistency. So you really don't want to get complacent and be uninformed about how you are invested currently because the market is looking pretty good right now and you have good number of values on your account statements. This is the time where you really want to know and have better clarity as to what you're exposing yourself to. I had a retiree that back in 2022 was in 80% equities, and they lost a good chunk of their money, not only in equities, but in the bond funds that they were in. So when a market correction hit there, they realized that they really should get better information about what they should do going forward. Mm-hmm. And so we put together an investment plan that was better aligned with their strategic retirement forecast for creating income because we did a personalized plan strategy. We showed them how to take advantage of the different alternative investments and proactive money management to give them more consistency in their returns, a lot less risk, and we created the income that their plan identified that they needed to create, which was their income gap that their Social Security wasn't going to be able to cover. And then we also employed some tax planning. So now we made them more tax efficient in the future years that will give them more spendable income. So I think people shouldn't just focus on the market where it is today. They should look at the big picture of what they're doing with their money and find those vulnerabilities that they might have, not just in the market, but in other areas of a lack of a tax plan or paying too much in taxes or just paying too much in fees. Mm-hmm. Maybe their investment plan has done well, but maybe the fees are pretty high too.
For years, hitting that six-figure salary, it meant that you made it, right? You're a big deal. You're making over those six figures, but no longer. Now, many, especially younger folks out there, consider it merely a starting point. But watch out for inflation. We know that's always the silent killer there. The government says $125,000 salary in 2025 has become about the same buying power as $100,000 did 5 years ago. That's kind of depressing. So how do you help clients build income in retirement that keeps up with inflation?
Well, that's something that you really got to pay attention to when you're planning. You have to look at what inflation will do over a long period of time. And when we do our planning forecast, we stress test it for different levels of inflation because it erodes purchasing power over time. And a lot of people only have one income source that will rise with inflation, and that is your Social Security. A lot of people have Social Security, which will rise with cost of living adjustments, and some people have pensions that will also do the same thing, but many don't. And when you look into the future with what those numbers might look like when you inflate your spending needs, it could change the landscape of your affordability of living the lifestyle you have very dramatically in a bad way. And so we want to always model out whether your plan is set up to be sustainable with inflation in the mix and taxes. Taxes is another big erosion factor. That's why I always say that it's important to have a forward-looking tax strategy to mitigate taxes as best as possible. But when we look at inflation options, when we build out an income plan, we can use other tools that might provide a hedge against inflation. You could have an annuity with a lifetime income rider on it that will increase with inflation. Some people use that tool to complement their Social Security income. There are other things that we look at are dividend growth stocks. We look at income notes that are paying very good yields that are much higher than the inflation cost typically. So we're looking at alternative tools that are income tools. And when we build a strategic income distribution plan, incorporating all these different tools and different sources, it gives people a great foundation of consistency of income and the ability to outpace and live with this inflationary environment and live the lifestyle they desire to have. And that usually when we design this plan, there are other dollars in their nest egg that we didn't need to use to create that immediate income could be allocated for other planning objectives and purposes and more inflation hedging later because that money could be invested differently for growth, right?
Right.
So, there's a lot of moving parts. There's a lot of different tools. And these are things that a lot of people don't really have a good handle on how to tie this all together and what's available out there because some of these things are in the blind spot with most folks because they're just used to building their investment plan with a bucket of mutual funds and maybe some stocks and bonds. And there's a much bigger world of opportunity and financial resources that can really complement a great plan design. You just need to know that they're there, and this is what we point out when we do planning with people. We show them what's in their blind spot, what's working, what isn't, and then what are the better solutions to implement it to make it work in a more effective way.
And also want to point out here, when you're talking about showing these solutions, these blind spots, everybody's situation is different, folks. I mean, everybody's wants, needs, desires, the income you've accumulated, all these things are different. So when you put together this financial plan that, again, is going to be built for growth and protection of inflation and all that kind of stuff, you want to make sure that you are putting together your puzzle pieces. And that's what David does. He creates these custom plans designed just for you. There's no cookie cutter approach.
No, I mean, everything's personalized. And what's kind of nice about this, most people invest their money without a plan, right? So that's putting the cart before the horse. And how do you really know you're putting your money in the right place? But when you have your numbers that have been incorporated into a personalized strategic plan design, which means you tell us what lifestyle you want to live in retirement. We put that price tag on what it's going to cost you, adjusted for inflation and taxes. We plug in your current resources without changing anything to see if it's going to work. And then we can see the problems that lie ahead by looking into the future with what you're doing today. Now we have time to implement better solutions, better strategies, better investment tools to optimize the results and take less risk and pay less in taxes in many cases and have backup strategies when a spouse dies and there's going to be a change in income source. Or what about out-of-pocket health care? That is a huge thing that's derailing so many retirements today where you have a spouse that might need help at home and you have to hire an aide or going into a long-term care facility. You do not need to buy long-term care insurance because there are different ways to tackle that potential expense if it were to arise without paying those expensive premiums. So we look at the backup strategies to your overall strategy. So the thing is when people want to envision their retirement looking forward and tell us what their dreams, their goals are, what they want to do with the kids, and beyond the basic necessities of what they're going to need to live on, we can plug and play how to build your plan with what outcomes you're looking to achieve. And so it's like going down a menu. What do you want your retirement to look like? And then we reach out into the planning and the investment world to see, all right, what do we need to put together to make this all work? And so like we say, it's not one size fits all when it comes to planning.
For more details or to sit down with David for your complimentary financial GPS, visit masteringyourwealthradio.com.
Investment advisory services offered through Brookstone Wealth Advisors, LLC, BWA, a registered investment advisor and an affiliate of Brookstone Capital Management, LLC. BWA and First Financial Planners are independent of each other. Insurance products and services are not offered through BWA, but are offered and sold through individually licensed and appointed agents.
Information provided is not intended as tax or legal advice and should not be relied on as such. You are encouraged to seek tax or legal advice from an independent professional.
Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims-paying ability of the issuing company and are not offered by Brookstone.
David Gagnon and First Financial Planners are not affiliated with nor endorsed by the Social Security Administration or any other government agency.
Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interests of our clients and to make full disclosure of any conflicts of interest. Please refer to our firm brochure of the ADV 2A Item 4 for additional information.